If you're self-employed, a freelancer, gig worker, or small business owner, and the phrase tax returns required makes you want to close the tab, this video is for you. Because here's the uncomfortable truth nobody tells you. Most business owners don't get denied because their business is bad. They get denied because the system is built for W-2 employees, not entrepreneurs. So, let's talk about how business loans actually get approved when tax returns are weak, missing, delayed, or strategically minimized. First, let's clear up the biggest myth. No tax returns does not mean no options. It just means you're playing a different game. Traditional banks lend based on history. Alternative lenders lend based on momentum. Banks want tax returns, profit and loss statements, balance sheets, personal income, and a tolerance for waiting 60 to 90 days for an answer that's usually no. Alternative funding looks at what's happening right now. Cash flow, deposits, consistency, velocity. If money is coming in, you have leverage. Here's the real key. Lenders care less about what you claimed last year and more about what your business is producing today. That's why the first path to funding without tax returns is revenue-based financing. These programs look at your last 3 to 6 months of bank activity, not your tax filings, not your write-offs, not your CPA's strategy. If your business shows consistent deposits, even if your taxes are messy or non-existent, you can qualify. Approval is based on patterns, not paperwork. Second option, short-term working capital. This is where many self-employed owners get their first real win. These loans are designed for businesses that need fast capital to cover gaps, seize opportunities, or smooth out cash flow. Approval focuses on average daily balances, deposit frequency, and account health. No tax returns, minimal documents. Speed matters more than perfection. Third path, bank-linked financing. Some platforms allow lenders to securely analyze your bank account directly. Instead of you uploading documents, the data tells the story for you. If the numbers make sense, approvals happen quickly. This is where tools like Bank Breezy shine. It's designed for business owners who don't fit neatly into traditional underwriting boxes. If you've got real revenue but unconventional finances, this approach cuts through the noise. Fourth path, using a funding marketplace instead of chasing lenders one by one. Most people fail because they apply to the wrong lender first. One denial kills momentum. Multiple denials damage confidence and credit. A marketplace approach routes your application to lenders that already accept non-traditional profiles. That's how platforms like David Allen Capital operate. They match the business to the right capital product instead of forcing the business to fit a rigid model. It's not about convincing a bank. It's about aligning with the right funding lane. Now let's talk about what actually hurts your chances. No separation between personal and business accounts. Inconsistent deposits. Constant overdrafts. Revenue spikes with long dry spells. These aren't deal breakers, but they reduce leverage. The fix isn't perfection, it's stabilization. 3 months of clean, predictable activity beats 3 years of chaos. And finally, let's talk mindset. If you're self-employed, you're not unqualified. You're just operating outside the system banks were built for. The goal isn't to beg for approval. The goal is to position your business so capital makes sense. If you want to see what you qualify for without tax returns, without hard credit pulls, and without wasting weeks chasing dead ends, use the link below to check options through platforms like Bank Breezy and David Allen Capital. This is how real entrepreneurs fund growth when the paperwork doesn't tell the full story. Momentum over mythology, cash flow over credentials, strategy over stress.